Well, oil prices, they did fall a little bit today, but they're still above the $85 a barrel mark. Our next guest says there is nothing fundamental that warrants the recent surge, though, in oil. Edward Morse, head of commodities research over at Credit Suisse here in New York, joins us now with more. Ed, good to have you here on Street Smart. So why is there nothing fundamental that warrants the recent move up in oil, in your view?
Well, the fundamental market hasn't changed very much since the jump between 75 and 80 and to $85 a barrel. Most analysts who look only at fundamentals are essentially bearish. They're bearish the short term. They're bearish the year as a whole compared to where prices are. And the financial markets are a bit ahead of where the fundamentals seem to be.
So what would be a better level in your view?
Well, you know, it's hard to say what the just or right fair market value is, but there's nothing new that's happened in the last $10 a barrel jump. If there's anything new, it's that demand in every part of the world other than China looks pretty bad. The U.S. demand year on year has not grown very much. If you look at the four principal products, U.S. inventories, Singapore inventories in most markets where we can measure them are as high as they've ever been in terms of absolute volume of commercial stock. And there are expectations that seem to be driving the market up.
But how about the economic data? I mean, doesn't it look decidedly better after last month's jobs report and then pending home sales blow away expectations? I mean, what looked like a sort of mediocre recovery, isn't it starting to look more robust? No,
certainly it's the information coming out of the macro economy that are driving both base metals and some of the energy markets, oil in particular. But it's all anticipatory. There certainly should be a relationship between GDP growth, industrial production growth, and demand for diesel fuel, and yet all of the data we've had on diesel don't show much of an increase in diesel demand at all coming out of the U.S., certainly not out of Europe or Japan. And the data coming out of China actually look like the market, no matter what the demand level for diesel is turning from an import market to a net export market, putting more diesel and more distillate into the world. So from a product market perspective, right, sure, there's a driver, but there's no evidence yet that that driver is coming through.
Well, that's a good point, Ed, but nonetheless, you know, there is this disconnect, and maybe it's not, you know, trading oil, that is, you know, on fundamentals, but nonetheless, it's moving up here. Do you see $90 a barrel oil come summer, when we typically see those higher oil prices?
I can imagine the conditions in which $90 is touched. There's nothing magic about the $90 number, especially when you're at 85. What would drive it? It's that refinery demand for crude goes up in the summer. Refineries, not just in the U.S. but globally, are coming out of maintenance. They're also seeing very high margins. Those high margins increase throughput in the refining system and increases demand for crude oil. On the other hand, if there's no product demand to be met by the new supply of diesel and gasoline and jet fuel that's being produced by the refineries, then they'll drop their runs and demand for crude oil go down, and we'll see a drop in price.
What do you expect as far as the dollar's impact here? I mean, Michael Arenstein thinks the dollar should continue to strengthen and that should hold prices down, but it doesn't look like that's been the case with oil.
Well, it's not been the case with copper and a bunch of other commodities either. We've gone from general consensus, and it's a historically factual observation, in fact, that for 20 years before 2007, there's been no tangible relationship between the U.S. dollar and the price of any commodity. And now we've gone into a period of time when there was a very strong negative correlation based on a lot of macro expectations. That's been eliminated from the market, and for the last quarter or a little bit more, we've seen as many days when prices have gone up and they've gone down together.
It looks like the camera just sort of moved over by itself. In any case, unfortunately, that's all we have time for. Ed, we appreciate you spending some time with us. Thanks very much. Ed Morse there of Credit Suisse.